Ladies and gentlemen, stop what you're doing and listen very closely because the IRS just quietly admitted something that almost no one in mainstream media is even talking about. And I'm telling you right now, if you don't move your money before December 31st, you will lose money, guaranteed. So today, President Donald J. Trump is back in the Oval Office, and in 29 days, his 2026 tax law officially flips the entire tax code on its head. And I'm not even exaggerating here. This is the biggest wealth shift since 2017. And the people who act now, they are going to walk into the new year with a massive financial advantage. Meanwhile, everyone else pays more simply because they waited too long. And here's the part that should make every American furious. The wealthy already know this. The lawmakers already know this. And now with the IRS releasing the new 2026 bracket changes, they're already restructuring their income, their investments, their deductions, because they already know that this window only opens once. And real quick, I'm not your financial advisor or tax professional. I'm here to educate, not to give personal tax advice. Everyone's situation's different. So make sure that you talk to a qualified expert before making moves with your money. Now, you're about to hear the 3 most urgent moves you must make before December 31st, plus the hidden IRS rule change that hardly anyone has noticed, but will affect every dollar you earn in 2026. This is not fear mongering. This is just math. This is timing. And this is your chance to get ahead before the clock runs out. Hit the like button and subscribe. Let's start with a quiet bombshell that the IRS just dropped. No press conference, no media tour, not even a late night headline. Just a quiet filling on their website announcing the 2026 tax brackets under President Trump are officially changing. And they're changing in a way that absolutely flips the financial landscape. So for 2026, the IRS raised the threshold for every major bracket. So this means Americans will be able to earn more money before crossing into a higher tax rate. Now, here's the catch. The IRS, they released this update quietly, almost like they didn't even want everyday Americans to realize how powerful this shift really is. And this is why the wealthy have already started moving. They're delaying their income, they're restructuring payouts, they're holding off these big moves until January because they already see that the door is wide open for a major tax advantage the moment January 1st hits. You have about 28 days left to use this information. So now let's talk about this tax flip, shall we? Because this is where everything changes overnight. In 2025, your income hits higher tax brackets fast. The bracket ceilings are tighter, the tax impacts hit harder, and every extra dollar earned this month gets taxed under the 2025 rules. But on January 1st, 2026, under President Trump's tax law, the entire system widens. So what this means is that somebody making the exact same amount of money in 2026 will pay less tax than they would on the same income earned right now in December. Now, think about that for a second, okay? Earn $75,000 today, you could be taxed more. Earn $75,000 next month, you could instantly keep more of it. Now, this is the flip. The brackets stretch out, the thresholds expand, you get more room before you get hit with the higher rates. Now, this is why the wealthy delay income into next year because 2026 is simply cheaper. All right, so let's get brutally honest about something that the IRS will never spell out for you. Every single dollar that you earn this month is taxed under the worst possible rules. So if you pick up a bonus in December, taxed harder. Commission check hits your account, taxed harder. Side hustle payout, taxed harder. December income gets trapped under the 2025 bracket structure, which is tighter, harsher, and far less forgiving. But if that exact same money hits your bank account in January, under President Trump's 2026 tax brackets, suddenly it's taxed at a lower rate simply because the date on the calendar has changed. This is why wealthy Americans are doing everything that they can to push income into 2026, delaying invoices, shifting commission dates, moving contract payouts, even pushing business distributions into Q1. Because every day that passes locks in losses, and December 31st isn't just a date. December 31st is the line between keeping your money and giving it away to Uncle Sam. Now, speaking of losing money that you didn't have to lose, let me tell you something. Let me say something that is going to hit home for a lot of people who are watching the show today. Imagine losing thousands of dollars simply because you didn't make a 10-minute phone call. This is exactly what happens with bad Medicare plans every single year. One moment you think you're covered, the next, the bill shows up and you're on the hook for something that your plan should have protected you from. This is why I partner with Chapter. They find the mistakes before they cost you. They analyze your Medicare coverage in ways that most people never even think about, and they do it to save you from these expensive errors that could blindside your retirement. And here's the truth. Most people watching this aren't losing money because most people are already calling the phone number at the bottom of your screen right there, or they're visiting askchapter.org/Ron, and they're getting themselves protected. That phone number again is 909-563-8279. And of course, this is a completely free service for the Ron Yates community. And you know, I love when you guys share your real experiences this with me because it shows people the impact Chapter actually makes. So check this one out. So Paul Ellis, he said, at least Chapter saved me $265 a month on medication. Thanks, Chapter. Hey, Paul, I just want to say thanks, man, for sharing that with me. Saving $265 a month isn't a small amount of money. That is real savings staying in your pocket instead of disappearing into the system. And I guarantee you, someone who's watching this right now, they really needed to hear your story. So I really appreciate that, Paul, because a lot of folks, they don't realize how much they're overpaying until they see someone else speak up. Appreciate you, Paul. All right, so now let's get into the 3 most powerful tax moves that the wealthy are executing right now. These are moves that the IRS doesn't promote, but absolutely allows. So move number 1, this is pushing income into 2026. Now, we already covered this one, and this alone can save thousands of dollars. I mean, timing is everything, and January income is simply taxed better. Move number 2, strategic tax loss harvesting. This is where you sell losing investments before December 31st in order to wipe out gains or even knock down your taxable income. This is how wealthy families turn a losing stock into a winning tax strategy. Move number 3, max out your tax advantaged accounts. HSAs, IRAs, 401ks, SEP IRAs. These let you legally hide money from taxes. And with 2026 limits increasing, stacking deductions now gives you a double advantage later. The wealthy are using all 3 of these before the year ends. The average American uses none of them. And this is how the wealth gap widens quietly, legally every December. And so now let's talk about the wealthy you're doing right now before you even finish watching this video. Because trust me, guys, they aren't waiting for the IRS to send them a postcard. They're already moving their money in ways that most Americans never even hear about. Wealthy families have accountants and advisors who immediately scan IRS updates looking for hidden advantages. And with the new 2026 tax brackets already published, they're restructuring their portfolios, triggering intentional losses, delaying gains, and scheduling income for January 1st forward. So what they're doing is they're prepaying specific expenses in 2025 so that they can claim bigger deductions now. They're waiting to sell major assets until they fall under Trump's expanded 2026 tax thresholds. They're shifting business income timing with surgical precision. Meanwhile, the average American worker is just completely in the dark. Why? Because most Americans don't even get alerts when the IRS quietly changes the tax code, but the wealthy do. And this is exactly why they stay ahead, and this is why everyone else stays stuck. And so now this is something that should get every investor sitting up in their seat. The investment tax world, it changes on January 1st. And if you don't prepare before December 31st, you're pretty much just going to wake up blind in a brand new system. So under Trump's 2026 tax plan, the investment brackets shift in your favor. So the 0% capital gains bracket, it expands. And what this means is that more Americans can sell investments tax-free. The 15% bracket, it widens, and it allows higher earners to keep more profit before hitting their 20% tier. And for the high net worth investors, the 20% threshold jumps, creating a much larger window before hitting that top bracket. So this means that selling before December 31st could cost you thousands more in taxes than simply selling the exact same asset in January. The same stock, the same gain, 2 entirely different tax bills just because of the date on the calendar. It's crazy, I know. And that's the shock that's coming January 1st. Now, the question is, are you walking into it prepared? And so now let me go ahead and expose one of the biggest traps in the entire tax code. This is something that even experienced investors, they get wrong every single year. The 30-day wash sale rule. So here's the deal, guys. If you own a stock that's down and you sell it before December 31st to capture the loss and legally lower your taxes, the IRS will allow you to do that. That loss can erase gains, reduce your taxable income, and even carry forward into the future years. This is how wealthy investors turn red ink into tax savings. Now, here's a trap. If you buy that same stock back within 30 days, the IRS wipes away that loss. It's gone. Kind of erased like it never existed. One mistake, one automatic reinvestment, one emotional decision, and an entire tax strategy collapses. Now, most Americans don't even know that this rule exists, but most wealthy investors, they plan around it with military precision because a properly harvested loss can be worth thousands of dollars. In fact, the clock expires December 31st. The 30-day countdown starts the second that you sell. Now, here's where things get really interesting. A retroactive tax loophole that most Americans have never even heard about. But business owners and side hustlers are quietly feasting on it before it disappears forever. So under President Trump's 2025 tax adjustments, 100% bonus depreciation has been restored for certain business purchases, and it applies retroactively to qualifying purchases made earlier this year. So this means cameras, laptops, production gear, office equipment, work vehicles that are over 6,000 pounds. Yes, even the G-Wagon Mercedes-Benz influencers love can be written off 100% in 1 year if it is used for legitimate business purposes. So you spend $20,000 on equipment, finance the rest, and legally write off the entire amount as if it came straight out of your pocket. But here's the danger. If you don't make the purchase before December 31st, you lose the deduction permanently. So this loophole doesn't roll forward, it slams shut. The wealthy already know this, and they're spending strategically because they understand the difference between a purchase and a tax weapon. Let's talk about one of the most misunderstood tax moves in America: donations. Now, most people think, giving money automatically lowers their taxes. It doesn't. In fact, most Americans get zero tax benefit from donating because they never cross the standard deduction threshold, which is $14,000 for single filers and $29,000 for married couples in 2025. But wealthy Americans, they've engineered the perfect workaround. It's the DAF, also known as the Donor Advised Fund. Now, here's how it works. They donate money, stocks, or even crypto before December 31st, lock in the deduction right now, and then decide where the money actually goes later, months later, sometimes even years later. This gives them two advantages. They beat the standard deduction and they secure the tax write-off during the year that it helps them the most. It's strategic generosity. It's legal tax engineering, and the wealthy use it every December like clockwork. Meanwhile, everyday Americans donate from the heart and they get next to none of the tax benefit because nobody taught them the game in school. January 1st, 2026 isn't just a date. This is a reset button for the entire tax system under President Trump, and anyone that's paying attention, it is the beginning of a massive opportunity window that opens once and may never open again. Now, think about what happens at midnight, okay? New expanded tax brackets kick in, higher contribution limits activate, business write-offs rule shifts, investment thresholds widen, capital gains become more favorable. It's kind of like the financial equivalent of a fresh playing field, but only for the people who position themselves correctly before the year end. Those who move their income into January, advantage. Those who set up contributions for the new limits, advantage. Those who plan major sales or business moves for 2026, massive advantage. January 1st becomes day zero, the beginning of a tax year engineered to benefit earners, builders, investors, and entrepreneurs. But none of that matters if you stay financially stuck in 2025. So now let's zoom out for a second. Let's talk about the bigger picture, because this moment that we're living through right now, December 2025, this is being called by economists a redistribution moment. Not because money is being forcibly taken away from you or moved around, but because tax timing is about to create the largest voluntary wealth shift or wealth transfer since 2017, and possibly even bigger. Back in 2017, when President Trump passed the Tax Cuts and Jobs Act, people who acted early saved massive amounts of money. But this time, the shift is amplified by inflation adjustments, sunset provisions, recession fears, bracket expansions, all hitting at the same time. The wealthy will move money before the shift and ride the wave. Everyone else will move their money after the shift and pay the price. And just like in 2017, the gap between people who understand timing and people who don't gets wider and wider. Only this time, the stakes are higher. 2025 isn't just another tax year, it is the fork in the road. So here's how this ends. On January 1st, 2026, at exactly 12:01 a.m., two Americas will exist. In the first America, people acted. They shifted income, they booked strategic losses, they used deductions that the IRS never advertises, they prepared for Trump's new brackets, the expanded limits, the investment advantages, and the business write-offs. They walk into 2026 stronger, lighter, wealthier, because they understood that timing is everything. Now, in the second America, people hesitated. They waited. They assumed January would feel the same as December. They didn't move their money. And now they're paying more taxes on the exact same income simply because the date on their paycheck was wrong. Two Americas, two outcomes, one financial future determined by 28 days, maybe 29 days of decision making. And if you've been listening closely, you already know which side you need to be on, because the IRS has spoken. The clock is ticking. Move your money now before it's too late. I'm not an investment advisor. This is not investment advice. You should always consult with a qualified investment advisor before making any financial decisions. Be sure to hit the like button and subscribe. I'll see you on the next video.